Hi guys, how are we doing today? It is very cold in the UK still. I am fleeced up and ready to rock and roll today. So, welcome guys. Hope you're all doing well. Is that loud? I just realised I'm zipping up and down, zipping up and down, and right in front of my microphone. I'm also going to change my light because I don't like how it's changing so fast. How about we do? Should we do a piano? It's like I'm having a party. How we doing, Jason? Hope you're all good, my friend. What light is the best? Something like that, perhaps. Yeah, I'm not always a massive fan of having random colours behind me. Let's double check. Orange, yellow, ooh, green, blue. Nice light. There we go. We'll stick with purple. Purple's a nice colour. Yeah, it's like a lightsaber. I'm like Mace Windu now. Hey guys, welcome. Oh, I'm absolutely battered today. Absolutely battered. I was up at 5 a.m. yesterday to travel down to London for the Finance Magnets event. I didn't get home. Well, I didn't go to bed until about 12 p.m. Traveling down to London, it's about two and a half hours and then 2.5 hours back. I'm just wondering if they've uploaded the panel session that I did. Finance Magnets. I don't know where they're uploading them to. I'm presuming they're uploading them to YouTube. 3 days ago, 2 days ago. I'm presuming they're going to upload them into this channel. But basically, I was on a panel at Finance Magnets yesterday. This x.com. I was on this panel, which was about brokers' growth. I had a conversation with 3 guys who run and own AI companies. Braden, really nice guy. The other 2 nice guys as well. There was a bit of disagreement, I think, between myself and this guy on the right. How are we doing, Michael Rourke? Hope you're all well, my friend. Which is probably interesting to watch. I did bite my tongue, and I didn't get dragged into an argument, but there was a couple of things that I said that he disagreed with, which is fine, and that's the great thing about panels and debates and stuff. The only thing was this was in my opinion, this is happy Thanksgiving. I forgot it was Thanksgiving. This is a panel about brokers' growth, right? The only broker on there is Darwinex. Out of the 4 companies, and that's no negative about the other 3 guys. And obviously we had Adam Button from Investing Live, who was moderating the panel. But being the only trader up there, or the only intraday trader, let's say, and the only broker up there, I felt like I was in a unique position to provide a perspective from both, from both angles, right? Whereas the other guys, they were offering services to brokers. So I felt like there was a little bit of disconnect. And so I tried to provide the perspectives from what a trader would like to see and what brokers would like to see. And like I say, it'll be worth watching the interview, the panel discussion when it comes out, because like I say, there was a little bit of a disparity in what was believed across a couple of the panel members. I also then did an interview with Jonathan Fine, who is one of the event organizers at Finance Magnets, which was a one-on-one conversation where I talked about the prop industry, Darwinex, being a trader, and all of these sort of things, which again, I'm presuming is going to be released on the Finance Magnets YouTube. But as they come out, I will obviously share them in the community. I'll share them in the Discord, on Twitter and stuff like that. So keep your eyes peeled, and hopefully that'll come out within the next, whenever they do it. The Magnets finishes in about an hour, I think. So it was a 3-day event. The first day was networking. There was yesterday, and then there was today. And and so hopefully they'll start uploading that content over the next couple of days. But it was a good event. I met some really good people, met some old friends who I haven't seen in a couple of years, which was fantastic. I met Javi Tello, who works on our operations team at Darwinex, which was great because I don't get to see the guys at Darwinex often. Not everybody knows this. I feel like it's widely known, but Darwinex is based out in Madrid. So I'm one of two members of staff working in the UK currently. And I'm way outside of London, right? So I don't interact with people in person very often. So whenever there's a chance to, see people and speak to people, I love it, right? Because I don't get to do it on a daily basis. So somebody pinging me. I'm going to turn my notifications off. I don't like getting pinged when I'm on live. How you doing, Bad Kid? Hope you're all good, my friend. What was I saying? Oh yeah, so met some old friends who I hadn't seen in a couple of years. Met a couple of guys who I know who work alongside Darwinex as a liquidity provider. So went out for some lunch with those guys, and then I ended up with Adam Button, the guy who was moderating the panel that I was on, and a couple of other guys who I know who were ex-floor traders from like the 80s. And it was just fantastic to sit down with those guys and, not necessarily pick their brains, but listen to the stories of being in the pits and on the trading floor in the 80s and 90s and some of the stuff that happened back then. I don't think the way things were back then, I don't think they would ever go anywhere near back to that now, even on the trading floor these days. They were brutal. They were, yeah, some of the stories are crazy. So, but anyway, let's get into today's session. So I don't have anything specific planned, so I thought we could take a look at DarwinIA, or we could go over some strategy development stuff. As always, I like to keep these free flowing. Bad Kids asked if we can take a look at JBKU and tell me something about it. Let's take a look. Depending on how long the record is, will depend on how much information I can give you. Tail, how are we, my dude? I always know it's you without even looking at the name because I just see, hey, handsome. Darwinex 0. I'm also going to try and work on the if you guys are watching this on the phone, I'm going to try and work on the vertical layout before next session so that I can try and make it a little bit easier to view. I don't know how I'm going to do that, but I'm going to try. Maybe if I wonder if I can like rotate the screen so that you can watch it in full screen mode and can actually see what we're looking at, because I presume there's not much you can see right now. Okay, so the problem with this, we can definitely take a look at some stuff as kind of early stage analysis, but the problem is you've got less than 3 months. So you've got just over 2 months record. So it's very difficult for me to take a look through and give you something that's kind of actionable or something that I can say with my chest that is something that you should take a look at changing or adjusting. Usually I would say 6 months is kind of a minimum, but ideally 6 to 12 months as a bare minimum worth of data. Of course, it depends on how many trades you're taking. So you are active. I mean, almost 8 trades a day, 370 overall. So we do have a decent amount of data, but it's very concentrated on the past 2 months, right? And as soon as conditions change, we don't know how your behavior is gonna be. Load up Darwinex. JBKU. A good way to check kind of how confident we are in your data is by your experience score. So you can see you've got a 1.7 at the moment. That is literally just because you don't have enough time. So whilst you have a lot of trading behavior or a lot of trades, we haven't got enough time to say, confidently for the next 6 months, 12 months, or 5 years that you will continue to follow the same pattern of behavior. That's all this measures. It doesn't mean that you're good or bad at anything specifically. It's just saying we can't confidently say because we haven't been analyzing your behavior for long enough. So hopefully as time goes on, this will go green. There's nothing that you have to do specifically. It will just get better and better over time. But generally, that's why I ask for at least an experience score of like 5, 6, 7 before I start making or doing a deep dive analysis. So we'll take a look at some broader metrics like your value at risk and understand where you are and where you're headed. But I won't be giving you like concrete things such as you need to stop doing this or test this out or take a look at anything like that. Floating negative on 1600 on WXBY and 1120 on XXBI. Are you down on the day? Are you? I've been long DAX all day and it's caking it now, which is unfortunate. I say you're down slightly. Nothing. JBKU has a tribe. Hint. We'll have a tribe soon, my dude. I hope anyway. Maybe that'll be part of we're planning doing the growth plan for 2026. Maybe that's something that I'll include in that. Okay, so 83% of your trading is done through FX, 11% on commodities, 3% indices, and 2% stock and ETFs. Okay, so already just be careful you're not spreading yourself too thin. Like there's a lot of assets being traded here. You kind of need more data. It'd be great to know if you're an algorithmic trader or if you're a discretionary trader. That always tailors, or I always sort of tailor my feedback based on your style of trading, right? Because there's things that an algorithmic trader can do that a discretionary trader won't be able to do, and vice versa. But there's a lot of activity here. A lot of it is going to be inefficient noise, but we won't know until you have more trades, more data, more time. So, for example, right now, dollar CAD is almost 15% of your total trading activity, but you've had 9% win rate on it with a negative 1% return. So, at face value, I'd look at that and I'd be like, well, it's such an inefficient use of your trading activity and your time. But you know, overall, what might happen over a year is dollar CAD was just going through a poor period, and you might have a 20% win rate at the end of the year with a positive return. We don't know at this point, but it's something that I always try and work on with people, which is carving out the efficiency. Okay, so we have our expected value based on different variables. So the assets that we trade, the times we trade, days we trade, the way that you trade. There's 1,000,001 different variables that go into the expected value of any position or any trade. But there's also the efficiency. So what I wouldn't want to do is trade something that's super inefficient, and I'm putting a load of effort in, a load of margin up just to get a minimal return. It sometimes doesn't make sense to do that. I have 3 yards in trading. Okay, so yeah, my screen like bugged out. Then I don't know if you guys saw that. But yeah, it's one of those. I think it's too early for me to give anything concrete at the minute. It's my first time at Darwinex. Yeah, I mean, solid. Listen, it's a great start. I think if you've got the skill and you've got the experience, then you're onto something. But stuff like this, I won't be able to give an accurate analysis on this. And anybody who comes to these sessions regularly knows I love going over all of this sort of stuff. So what I would say is check back in a few months' time when you've got somewhere between 3 to 6. Because of your trading activity, we'll be able to do it a little bit earlier. But I would say 6 months would be perfect. Maximum negative excursion looks okay. VAR, fantastic. Main thing here is the consistency. I don't care whether it's high or low. The main thing is the consistency. I am bothered whether it's high or low relative to what it's been historically. So if it was 30% historically and now it's a 1%, I'd be wondering why that is. But you're pretty consistent across the 2 months that you've been trading so far with Darwinex. I would like to keep it around about 1 to 2%. Remember, if this goes up to 4%, it's not a 2% increase from where it is now. That would be 100% increase, which is good to bear in mind. Or 3%, not 4%. Sorry. Let's take a look at your capacity real quick. I'm wondering if do you grid or martingale at all? The only reason I ask that is because there's a couple of telltale signs. You've got a high amount of trades. The only thing is you don't have a very high win rate, which is fine, and you have a high payoff ratio. So actually, ignore me. I don't think you do grid or martingale. Solid capacity, 72 million. Yeah, absolutely phenomenal. Which means that your signal account level would be far higher because you're being scaled up by, I presume, 3 times maybe 3x, 3.5x risk multiplier, which would mean that your max investment is probably in the hundreds of millions at base value. But obviously scaled up to the Darwin level, it's 70, is it 72? 72 mil, yeah. But like I say, there's not enough data to go over really yet. So check back in in a couple of months. I don't mind doing it on a session or kind of, you know, one-to-one or recording a video of it or anything like that. Tal said, Mr. Handsome, was there an answer on the booster allocations? For example, I have 150k and want to add another 150, but it's not in 150k. Is that impossible? I don't have an answer on that. I completely forgot to listen to the voice note that you sent me. I've just been playing catch up today on all of my messages and all of my tasks that I missed yesterday whilst in London. But just ping me again so that you're in my unread messages on Discord, and I'll have the conversation either this afternoon if any of the guys in Spain are still there, or if not, I'll speak to them. I'll speak to them in the morning and get you an answer. Oh, okay. Well, I just ignored you anyway then. Rob, how we doing, my dude? Bad Kid said, thanks, my brother. It's an absolute pleasure, dude. I'm looking forward to having this conversation in a few months again. No UQ2EK. Has everyone's YouTube names been like, have they done an update where people's names are like edited? Because everybody's name seems to have like changed from what they were. Strange. They said, note said, if I take approximately 8 trades per month, how long will it take me to get past the calibration stage on a new account? So your trading days will be fine, because every day that you hold a trade, every day that you hold a trade counts as a trading day. Okay, so don't worry about that. The risk calibration, I would say you're probably looking in between a month and 2 months. If you're a swing trader, which I presume that you are, then the risk engine does take that into account. I think Rob, who's in the session now, I'm sure if memory serves right, I think Rob had 5 trades when he passed. I say passed when he come out of calibration. Maybe it's slightly more than 5. I'm not sure. Yeah, might have been slightly more than 5. But if I remember right, it definitely wasn't 15. Tal said they replaced the subscription tab as well for some reason, or it's only for me. The subscription tab, I'm not sure what tab you're on about. This one. You mean out of the left-hand side? A lot of the account settings have been moved up into the profile icon in the top. Okay, so let's go back to Nikita Balbas. We started our Darwin on Monday. It's fully automated. Okay. Yeah, it'll be again. I mean, this is an even more extreme case. We won't have any data really to go off here. I'll take a look at your value at risk, but that's pretty much about the only thing that I'll be able to kind of gauge anything from. Just because there's not enough data to do any proper analysis on. Okay, solid. Yeah, floating between 6 and 9%. So you're probably just under a 1x risk multiplier right now. I try and keep that stable under 10%. So there's not much variance from your risk multiplier perspective, but yeah, there's not much I can say on this right now. We need more data. Again, what I'm going to suggest is you come back in a couple of months and we sit down and we do this. We have this conversation again where I take a look over the record. It's too difficult. I think 6 months, regardless of how many trades you have, is a good time period to start thinking about making changes. 12 months is where you go, okay, this is what we have. How do we optimize this moving forward? Is there areas where I'm trading? I'm taking positions that have a low expected value. Is there areas of my trading that has low efficiency, and how can I overcome that? But you're not going to know that really until there's a broad time horizon. But anyway, welcome to the family. I'm fully automated too on Darwinex. Enjoy the ride. That's all I'm going to say. And if you need any advice or you need any help, feel free to reach out always. Bianca Jackson, hi, how we doing? G47 has asked, can we take a look at APMG? That sounds like some sort of Mercedes. APMG. AMG, that's why. Okay, here we go. Now we're talking. Now we're talking. How long have we got? May, June, July, August, September, October, November. Okay, so we got 7 months. Just over 7 months, I think. Super steady, super steady return. This is what I like to see, is something that's more consistent. Let me get my epic pen. Epic pen. Can I get how we doing? I'm not even gonna pronounce your name because it's all in one word. But how we doing? I'll check out endpoint if I get time, my friend. Tail said, "Can I get an XAQP shirt when we get into gold?" I love how it's when we get into gold. But yes, but perhaps you can. One of the things that I asked Joanne to get created for me was I wanted a jumper. He's got one similar. I wanted a jumper with the owl eyes here across the chest, like very faint, and then on the back, on one shoulder XA, and on the other shoulder QP. Maybe the QR code on it so that people can invest it from the QR code. I'm only joking. The FCA would have a heart attack if I was doing that. Okay, so what I like about this is the steadiness. Like the drawdowns are all fairly controlled. This is more of a stagnation period than a drawdown. It shows like that's a drawdown to me. This is a stagnation period, which is fine, especially if this is automated, which it looks like it is. If this isn't automated, then fair play. That's one of the smoother equity curves I've seen from a discretionary trader. But what I would rather is nothing, like big spikes like this, big periods of drawdown. Like that's never an ideal equity curve, right? Whereas yours is very, very stable, very, very steady, just up and to the right. Get rid of you. Okay, assets and time. Let's start with strategy analysis first, actually. 195 trades. Average daily trade frequency is 1.32 with 100% long exposure. Interesting. So I'm presuming, and I'm taking a stab in the dark here, I'm presuming you're either trading gold or NASDAQ. Okay, perhaps not. DAX, dollar yen, WS30, NASDAQ, gold. Okay. So are you long only on everything that you trade? APMG. APMG. How are we doing? Welcome to the session. Oh yeah, so you're literally trading long only, no matter the asset. Interesting. I mean, I guess it takes half of the guesswork out, right? If is it going to go up or down today? You just don't care. You just get long regardless. Okay, so let's take a look. Take a look. 43% win rate on indices, 36% win rate on FX, 54% win rate on stocks, and 61% win rate on commodities, which kind of makes sense, right? FX is probably the most efficient market. Well, it's not probably, it is the most efficient market. Commodities such as precious metals and US indices, indices in general, as asset classes, they are kind of designed to go up and to the right. I think I said up and to the left earlier, which is a mistake on my end. They are designed in nature to go up and to the right. And therefore, if you're taking a long bias every day, i.e. if you're a long only trader, you're probably going to do better on those assets than on something that's a little bit more fluid like FX. And your win rate shows it, right? There's not too much of an efficiency deficiency here. I would say the biggest one is the fact that the stock and ETFs trading is like your smallest portion, but it's beaten the return of every other asset class. But there's nothing to be really making any decisions of here. Yeah, there's nothing that really stands out, to be completely honest. Solid all way around. I think you have a positive risk to reward as well, which means that we can get away with a lower win rate on any of these assets anyway. Let's skip that because I don't like that metric. Cool. This is super nice to see. So all of your daily trading activity, which again, it's going to be very similar because of the tightness of your equity curve, how solid your curve is. Presumably your daily returns are going to be consistent as well, right? And you can see that across all 5 days, Monday through Friday, there's pretty much zero discrepancy between any of the days. Now, of course, your Friday, you've still got tomorrow's data, sorry, to go in. So this could close the gap even more, I guess. But yeah, all positive days, so there's nothing to be concerned about. There's no real behavioral concerns here. For the guys who've been to these sessions for the past few months, you know, there's a couple of different things that I talk about here. There's strategy issues, and certain strategies will work better on certain days and worse on other days. For example, mean reversion strategies aren't going to work the same every day of the week because the weekly profile usually has its expansion and its contraction at different times or different days of the week. Therefore, mean reversion and trend following strategies are probably going to perform better and worse on different days. Then you have the behavioral things or the routine habits, such as, you know, walking away from your desks for certain times of the day or certain days of the week. So you might work on a Thursday and a Friday and you have to go into an office. So you're not trading at your desk, which means that your performance might drop on a Thursday and a Friday. Alternatively, it might boost your performance on a Thursday and Friday because you're not there to micromanage your trades. So there's two different angles to look at this. Is my strategy under or overperforming on a specific day? And the second one is, what's my behavior like on a specific day? And again, is there anything that I can do from an efficiency perspective? But yeah, super tight, really, really, really nice. I was gonna say really nice curve, but it's not a curve specifically. Okay, back to your stats. Daily trade frequency of 1.32 with a sub 50% win rate slightly. So just under 50% of 46.67. But you have a payoff ratio of 1.51, which this is your risk to reward. So for every $1 lost, you're making a $1.5 gain effectively. And you're doing that with a decent win rate of 50% almost. Profit factor 1.32. I'm not too bothered about that right now. You also have, which is a positive sign, and I talk about this quite a lot in these sessions, is a positive duration ratio. And the reason this is a good sign is because it's clear that you know when to cut your losers and when to hold your winning trades. So your average losing trade duration is half of your average winning trade duration, which is kind of like a skill in itself, being able to hold your winners. People talk about it a lot, but not many people can actually do it. So the fact that your average losing trade duration is 9 hours and 20 minutes, but your average winning trade duration is 19 hours and 20 minutes shows that when things are going your way, you don't panic and you just let them play out. And equally, you cut losing trades sooner than you would winners. I'm not going to go over everything because we've done quite a few already. This is a literal perfection. Let's get my pen. So usually what we see here is random spikes down. So you might have a few candles like this. And I always say, again, it's what we need to do is we need to understand how far do your winning trades move against you before they turn into winners. Okay, and trying to make it as efficient as possible. Does it make sense to hold trades past X percent drawdown if we know that it has a much different expected value? For example, if a trade goes 20 pips in drawdown on average, it means you have let's say a 60% win rate. So what happens is we know that 20 pips in drawdown is likely to turn around and become a winning trade. Now, if we find out that 25 pips, let's say, is the breaking point of this, and any trades that went against you 25 pips, only 25% of them were winners, because what they would do is that's a 25 pips drawdown, and then they would likely do that. If we can find out what this breaking point is between the positive expectancy and the lower expectancy, then you can optimize your stop placement, not based on charts, not based on technical analysis, but based on your data. Okay, so if we know, maximum negative excursion, or maximum adverse excursion, as it's otherwise known as, is 20 pips. And at 20 pips, I have a 60% strike rate and my expectancy is XYZ. Then great. What I will do is I will cover that with a 25 pip stop, because I know that if trades move against me by 25 pips, I have a 75% chance of losing that position. 75% chance of losing. So we're optimizing our stop based on how far the market usually moves against us. Now, on the flip side, what I don't like, and I will be honest, is this one trade here, where the return is so far higher than the other trades. And the only reason that I don't like this trade is because I always ask, why this trade? Why not this one? Why not this one? Why not this one? Because in between here and here, it looks like you was doing something different over here, because there's a few different, it's a less consistent, but there's pretty much an average there, right, that you let your trades run to. This trade, however, you let run far beyond the average. And there might be a reason to it. You might say, well, it was because it was a break of a weekly level, or you know, there was some news come out and price collapsed and I was short, and therefore I took my target off and just let it run. There may be a reason, but if there's not a reason, or the reason is more emotional than it is from a strategy perspective for this trade again, then you have to ask why. And the problem is with this specific trade is you closed it at break even, which is even more concerning, right? This is getting into more strategy specific stuff, but how, and this is a question to ask yourself, right? How did your biggest winning trade turn into a break-even trade? There should be a fail-safe in your system to at least capture some of this, right? Whether it's your average, slightly above average, or, you know, what. And again, only you will be able to answer this question. I'm not trying to grill you. I'm just asking you, why wasn't this position closed here, 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 or even down here? And to let that trade turn around and take you up a break even, ask yourself why. Because all of this profit, I'm getting off on a bit of a tangent here, but this reminds me of the classic, oh, it's a free trade because I moved my stop to break even. And I'm not saying that's what you did, but that's what it looks like. I just want to remind people that there's no such thing as a free trade, because this, whilst you was in the trade, this was your profit. If you'd have closed that position and realized the gain, that was your money, right? But you risked all of that by letting it turn and run back to break even. Let's see what trade it was. So it was the Dow on 18th of August. Let's load up the Dow and see what it looks like. Okay, fair enough. Was a mistake in the bot configuration. Fair enough. Risk 1%. How we doing, dude? Having a bad end to the year. Hopefully can turn it around December. That's all you can do, man. Just keep loading forward. You know, roll with the punches and see what happens. I don't know why we're checking this. If it was a bot configuration, that's fine. MoneyVD said, "Can you explain how the monthly payout upgrade works?" So it's an optional. How are we doing, Tan? Hope you're all good, my friend. It's an optional upgrade. So there's, you know, if you don't enable the monthly payouts, then you would be paid out every quarter. But if you have the monthly payout, we work out your high watermark on a monthly basis instead, and pay out your performance fees at the end of each month, as opposed to waiting until the end of the quarter. I say at the end of each month, it's the end of each month of your trading. So depending on where you started trading, which is usually the start of the month as you get DARWINIA. Oh, almost choked myself out. Wow. Oh, God. Can't talk. I went down the wrong way. Let me mute. I'm still struggling. I took a massive gulp of water and it just went down the wrong hole. Oh, mama. Dan, I'm sure we've done PWBV recently. I'm sure we have. Okay, here we go. So for you guys who aren't aware, you can view. Don't die, Kieran. I'm trying not to. For the guys who aren't aware, you can view your Darwinex Zero Darwins on DarwinX.com, where we do have more information available, more metrics available. You can see them up here in little investable attributes, and we'll go through some of them now. But to access your Darwin on DarwinX.com, you just go to DarwinX.com. You can log into the platform using your Darwinex Zero user credentials, and then search a Darwin. So go /Darwin / your 4-ticker Darwin, and then put a hashtag at the end. I don't know why the hashtag works, it just does. But okay, let's start with capacity. So solid capacity so far, 8.1 out of 10. Should mention these investable attributes are measured out of they're a score measured out of 10, 10 being the highest, 1 being the lowest, of course. To measure your capacity, we take a look at the toxicity flow of the orders that you put into the market. And so there's a lot of things here that are kind of common sense score that would boost your capacity and reduce the toxicity flow of your orders. For example, splitting bigger orders down into different transactions. So let's say you're trying to bid a market and you're managing 10 million, 50 million, 100 million. You would split down your orders so that you get the best fill price at each time, and that you don't wipe the order book. Trading more liquid assets, like if you're trading, NOK SEK, for example, as an FX pair, it's obviously more illiquid than euro dollar is. So therefore, trading euro dollar, you're probably going to have a higher capacity because the market will be able to facilitate your size a lot easier than it would on a thinner market. No one has capacity like mine, valued at 10. Is your capacity actually 10? Do you XBY? Darwinex. You have 10 too? Oh, my love. So your flow is great. But then, how are you scored 10 when there's a huge divergence? No, that's a projected divergence, isn't it? Yeah, your flow's like, your flow's super clean. Is that saying if you was being slipped by 2 pips or getting 2 pips worse fills? Yeah. Wow. I wish I was you. Show me the money. Okay, back to APMG. Current AUM or max AUM, alpha cap, max capacity, however you want to say it, is 81 million, which is phenomenal. I always think if it's above 50, you've kind of got nothing to worry about, at least short term or in the immediate future. If your max investment is below 10 million, then I would say, yeah, it would pay you dividends trying to fix that before you start building your record too far. But let's face it, for the vast majority of people, probably won't ever breach 100 million AUM. There's only a few people really who would ever get to that level. Arguably above 50 million, the number is going to be really, really low. This is outside of Darwinex as well, obviously. So if you're in that bracket, I wouldn't be concerned until the point you start getting to 30, 40 million or something like that. Because you choked on water. I've done that a few times. Last time I was sat in a public bench. Yeah, I've done it a few times in public as well, and it's one of the most embarrassing things that can happen. Like choking on something that's vital for survival. Make it make sense. But yeah, 81 million, I wouldn't be worrying, right? Because you could be managing 40 million, be a multimillionaire, and still be halfway to your capacity and be like, okay, well, I'm going to hire a quant team to come in, evaluate my systems, and help me increase my capacity. So you've got playing room. It's like I say, when it's like 5 million, 2 million, 500k, that's when I'm like, is it even worth trading a system if you know that the max capacity you can ever manage is 500k? Probably not. Your performance Monte Carlo, so you're currently in the 86.5 percentile, which is fantastic, basically meaning that you're outperforming 8,650 strategies running at the same risk against APMG, which is super, super, super solid. Loss aversion, we've already done the loss aversion, which is the maximum favorable and adverse excursions. Duration, consistency. We didn't do this, did we, on Darwinex 0? I'm not a massive fan of that metric. We'll skip that for now. I'm conscious that I've done well. We've scanned a few Darwins today already. I probably won't have time to do any more today. I might do another session tomorrow. Don't hold me to that. I hope to, but I can't confirm yet because I don't know how busy my day is going to be tomorrow, and that's the killer. But just as an FYI for anybody who comes to these sessions, if I don't get a chance to do your Darwin during the sessions, just let me know, and what I'll do is I can do a 1-to-1, or I can send you a video analysis of your Darwin as well. That white light's getting on my nerves, so I'm changing it. Yeah, keep it as that for now. Yeah, so HZBO, NPUN. If you want me to do like a private analysis, I can do a recording, and I can do it much quicker. If you want to wait, I can do it in the next live stream. That's no problem. Open and close strategy. This measures. It's quite a unique statistic. This is, and in fact, gonna do something that I've done in this session before, which is get ChatGPT. Open strategy. So what? Here we go. So if you're ever doing analysis on your Darwin, and the reason I'm showing you this is so that you have full autonomy to do this sort of self-analysis on your own without me being here. If there's a metric that you don't understand, like open and close strategy, which I understand, but I really struggle to explain it to others, but it's basically measuring the timing of your exits and the timing of your entries, which you can see you're ranked quite low. So am I, so don't worry about it. If you're trading breakout strategies, generally you're going to have well, at least a poor open strategy. But what I like to do as kind of an exercise is break this down to me as if I'm 5 years old to make it easy to understand. Okay, so load ChatGPT, Claude, Gemini, whichever LLM you use, and go copy. And just copy all the content. Paste. So this is going to tell us now. Explain to us like we're 5, because I am conscious that when you're going through stuff like this, if you've never done any data analysis before, or even if you're new to trading, you're probably not going to know what a lot of these mean, or what a lot of them show. And then when you start reading this, you're like, well, this doesn't make it any clear. If anything, it just confuses me even further. So I just stick it into ChatGPT, or I tell people to stick it into ChatGPT, and we get these nice examples. So imagine you're baking cookies, which is your trading strategy. So when you make cookies, 2 things really matter. When you put them in the oven, which is opening a trade, and when you take them out the oven, that's closing a trade. What an analogy. If you put them in too early or too late, the cookie changes. And if you take them out too early or too late, the cookie also changes. Darwinex wants to know, are you good at choosing the right time to put the cookie in? And are you choosing the right time to take the cookie out? Obviously, the open strategy and close strategy is relative to that. So how do they test you? We take each one of your real trades and say, what if this trader opened or closed earlier or later? Would it have been better or worse? So we create 10 pretend versions of your trade. So 5 open and close earlier, 10%, 20%, 30%, 40%, 50%. Okay, so that means, no, that seems like it's worded shoddy. So we do -10, -20, -30, -40, -50, 10, 20, 30, 40, and 50%. I feel like mummy is reading me a bedtime story. Hey, if it makes you understand what these mean, that's a win in my eyes. And then, yeah, 5 open or close later, 10, 20, 30, 40, 50%. So for every real trade, we get 11 versions. Your trade versus the 2 to 11, 10 pretend timing trades. We then compare them to see which one would have made the most money. Then ranks it like a race. Yeah, we can skip that bit. Okay, this checks on open strategy. If you open your trades a little bit earlier or a little bit later, would you have made more money? Same with close strategy. If you close your trades a little bit earlier or later, would you have made more money? Okay, that's all we need to know. But I think there's sometimes a fun exercise if you're ever stuck on any of these sort of things, because looking at something like this, you might go, oh well, it's great, I can see all the data, but I don't understand what it means. Okay, so get the K base from Darwinex K base, explain it to me like I'm 5 to the LLM, and then you'll be able to digest it, understand it, and understand which what all of these circles mean. Yeah, it's up to you guys whether you do that, I suppose. But as you can see, your open and close strategies are quite poor, which means that your entries and exits could do with work. If you're an algo trader, sometimes it's more difficult. For example, mine is also poor, but I do have a lot of breakout systems, and you can't really make those breakout systems any better in terms of entries, because you will only enter on the breakout. So you can't preemptively trade the breakout. But if it's telling you that you would be better to trade earlier, it's kind of like, well, that would change the strategy completely, right? Because you would be taking positions that aren't a breakout. So you're going to get caught up and chopped. Tan, we'll do it another day, dude. I won't have time today. But I'm sure we've done yours recently. PWBV. I'm sure we've done yours recently. Yeah, Dark Nexus. Didn't we do it a couple of weeks ago? Sure, we did it a couple of weeks ago. I could be wrong, but super consistent. Risk adjustment 5.2. That tells me the risk engine's getting involved in your positions quite a bit. Yeah, measures how often our risk manager intervenes to protect investors from excessive risk, but I don't see too many where it has got involved, which is strange. I don't know. For anybody who's unaware, the risk engine will intervene at 2 times. It will intervene when you open a trade, where it will adjust the trade sizing or the position sizing, and it will intervene during the trade if the deleverage exceeds a certain threshold. So based on how long you're in the market on any position, there's a set deleverage threshold within certain time frames. So under an hour, under 30 minutes, etc. If you exceed the deleverage threshold within that specific time frame, then the risk engine can get involved and start closing some of the exposure. Risk stability is 7.1 out of 10, which is great. To me, this actually seems higher than a 7.1, to be completely honest. But I think it's just because of the sudden spike here and the sudden drop off over here. At peak, it was 10.74, and at the moment we're about 50% of that. So yeah, actually, score of 7. Score of 7 seems about right, to be completely honest. What I would try and do is try and keep it as stable as you possibly can now. So it looks like it goes through periods of being stable, like here, then here, and then here. Just try and keep this as stable as you can forever. Okay, I'm presuming that this might be when volatility picks up and drops off. Perhaps maybe you're trading breakout strategies, and obviously during periods of volatility you might add more size. I don't know, but I just try and keep that as consistent as possible. Remember, for those who may forget, if your VAR is 10% there and 5% here, the difference between those two is not 5%. Okay, it's not 5%. It's 100% increase in your value at risk. Okay, so bear that in mind. It's not a 5% increase. It is 100% increase from 5% to 10% VAR, which I think a lot of people forget. Market correlation, yeah, fantastic. I mean, you trade one directional, which is great. I would be keen to see if that stays so high as markets begin to fall. If we go into a bear market and you still manage to perform long only throughout those periods, my gut tells me it will probably drop a little bit, because if you are going long only, then of course you are going to struggle trading stock and ETFs and indices. it's not always just going to go up and to the right, and therefore, as a long only trader, you have to be prepared for that. And then we already took a look at your. Did we take a look at your experience? I don't know, but either way, you know, experience doesn't really tell us anything. It just tells us how much data we have on you as the trader. Whew. I'm still feeling it in my throat from where I swallowed that water and almost keeled over. But yeah, I like to hear PWBB from you, the master of XAQP. XAQP is down today. It's down on the day, unfortunately. I've been in this DAX position is just going to kill me. This dollar yen's gone nowhere. So entered this morning, it's gone nowhere. And then this DAX, let's put it on the 5M. So the breakout, nice little push. Okay, halfway to target, great. Caked it, just chopped around. Nice little push again. As soon as it went above this high, sold off, closed below, and it's just started to sell off now, which is unfortunate, but it is what it is. I think I've been on a bit of a losing. If these trades both lose, I think it's like a 3 losing streak. Yeah, 1, 2. So I did have a good week last week, to be fair, and a decent week the week before. But to be fair, the whole month of November's not been too bad, to be completely honest. Yeah, it's just a shame that the DAX has decided to do that now. What day is it? Thursday. Yeah, it's not too bad. I don't even know what strategy that is. What is it? What's the magic number? 4238. DAX. It's one of my worst strategies anyway. That's the equity curve of this system. But it's been performing well over the past couple of years, so that's why I've kept it in. But yeah, it doesn't have the best risk metrics anyway. It's only got a 43% win rate, profit factor 1.19. So it is one of my, I think that's my lowest profit factor on a single strategy. Yeah, we've got this GU. That's quite low. NASDAQ. Yeah, so it is the worst strategy that I have. So yeah, it is what it is. We'll see. Hoping I said this right, and it happened to me. Happened to me on my last performance fee. So this was over 4K this morning, but of course, because of the DAX, it's going down. So I got 4K in estimated performance fees coming on the 2nd of December. So this is next week. And I said it for the guys who were in the session that I did earlier this week, I think it was, that I spoke about this. This happened last time. So you can see the performance fees that I've got that they're still in the account. I haven't done anything with them. Is 188 euros. Now, the day before, or like 2 days before I was paid that split 3 months ago, I had 700 euros in performance fees. The day before or 2 days before, absolutely caked it. Took a load of L's to end the month and ended up losing $500 or 500 euros. Sorry, and was left with 188 euros. So I sort of said, I feel like it's going to happen again. I've had a stellar month, up to 4K performance fees. And the last day before the performance fee split, I just know what's going to happen. It's going to, I'm going to take a load of L's, and it's going to eat away at the performance fees, and I'm going to lose $1,000, the day before. But what I'm going to do with this, again, not everybody knows that you can do this, but what I'm going to do, because at the moment, like I say, I still have the 188. I still have that in the platform. I haven't withdrawn it. So I have this plus this, which is what, about 4,100 at the moment, just over 4,100 euros. On the 2nd of December, I will have anyway. So I'm taking out 1,000 euros to pay for this, my IMC qualification. So I started my IMC, which is Investment Management Certificate in the UK. So I'm taking 1,000 out for that. And then the remaining 3K, I'm going to invest into XAQP, which people don't realize you can do. So you can send your performance fees to a Darwinex wallet as an investor, and then you can allocate capital to the index or to Darwin's. So what I'm going to do is I'm going to put the remainder into XAQP and leverage it up by 3 times. Although I have been looking earlier today, and Strategy Quant is doing a Black Friday deal. They're doing a Black Friday deal with 44% off. If anybody who's watching this now has used Strategy Quant, let me know. Let me know your thoughts on it, because I've tried to use it on their free trial quite a few times, and I'm a bit old school. I like to manually build my strategies, and I just can't get used to using Strategy Quant. But the people who have used it consistently for a long period of time all tell me it's a fantastic platform. So I've got 3 days to make the decision. But it's 44% off for 3 days. So I think it's like $1,000 for their pro version, maybe like 1.5K for their ultimate version for lifetime, I think. Take me in. One-time payment. Yeah, $990. So that's like, I don't know how much that is in pounds, probably like 800 quid. Ultimate 2.2K. Is that with the Black Friday discount? Yeah, it must be. But you don't get these things included. So you don't get Quant Analyzer Pro. I don't really know whether I'd use this. But yeah, drop me a message on Discord if you've used this before and if you would recommend it or not recommend it. Because like I say, I've got a few days to make the decision. But if I do, I'll probably go for the professional option and I'll take another $1,000 out of the performance fees, meaning XAQP gets 3K less. Because if I'm leveraging it up three times, which I'm happy to do because it's earned performance fees and it's into myself as a trader. Yeah, every 1,000 is 3,000 technically. So I'd be taking 3K investment into XAQP, but I'd be reinvesting it into XAQP in a different way, because I'd be able to make my strategies more reliable, my portfolio more reliable. I'd be able to build new strategies. Yeah, Eli Remy says Strategy Quant is good. Appreciate the comment, dude. G47 said, I've been using free trials for almost a year. Really good software and want to buy, just not have the money. Still full recommend. Yeah, I've used a few free trials. I've got one at the moment, but I feel like to make the most out of it, I think you need the paid features. But also, like, it's classic human psychology with things is if I give you something for free, you're less likely to use it, complete it, learn it, what have you. Whereas if you've invested your hard-earned cash into something, then you're more likely to go ahead, use it for what it's there for. Like, for example, a course. If I was to give you a course that was worth $3,000, $5,000, $10,000, however much it was, but I said it's completely free. There's a very, and they've done statistics on this and studies. There's a very low percentage completion rate because people just take it for granted, right? They don't appreciate it. But if you invest $1,000 or $2,500 almost, you will appreciate the product for what it is. Like, so yeah. But I also think if I get Strategy Quant, I'm gonna have to upgrade my PC because when I'm running it in the background, it sometimes eats up a load of the memory. So yeah. I also I don't know what the difference is between these. Obviously, I can see them here. I don't trade futures or equities, so that's no bother. Strategy Quant for business, MQL market support, not bothered about that. Portfolio Master, not sure what that does. Access to premium modules, not sure what they are either. So maybe I'll do a bit of research on them. Is it worth an extra $1,300? Probably not. Access to Quant Analyzer Pro. Now, I do use Quant Analyzer. I don't have the Pro version, obviously. I just use the free version. But you can do pretty much anything that I would like to do on the free version. I'm not sure how much it is to upgrade that Quant Analyzer. Pricing. So it's $349 on its own. So if you don't need, I guess and this is kind of a question to anybody if somebody has paid for it. If you don't need any of these, and you don't need the seasonal toolbox, and you don't need the futures feed, you're probably better to pay the $990, and then if you want Quant Analyzer Pro, to just pay the lifetime fee separately, right? I'm presuming. What you get with the Pro version that you don't get? So you get all of that. Limited money management simulator, limited to 30%. Okay, fine. I don't use that anyway. Monte Carlo, yeah. Equity control, 30%. portfolio master limited to maximum 4 strategies. I don't know what the portfolio master is. Oh well, I'm gonna do some research. We'll see. But yeah, I might invest some more of XAQP profits into XAQP from kind of an operational perspective, as well as you know, actually self-investing through XAQP as an asset. But anyway, guys, I'm going to leave it there because I'm rambling on and I'm talking about different things now. Yeah, APMG looks solid. It's got a really nice curve. Is it still open? Is this APMG? Yeah, APMG. Yeah, real solid 6 months. Keep it up. You know, not much more to say other than, yeah, solid work. Absolutely solid work. But guys, I am going to call it the end of the session here because my kids are going to be home soon. And as I always say, my house turns to carnage when my kids get home. The dog goes mad, kids go mad, I go a bit mad. So I'm gonna love you and leave you all here. I hope you have a fantastic rest of your morning, afternoon, or evening, wherever you are watching this from in the world. And I will let you know tomorrow if we'll be back for a session tomorrow. I can't promise anything because I know I've got a busy day, but if I can get some time before the end of the afternoon, then I'll try and jump on and we'll do another session. If not, then I will see you guys next week. Peace out, everyone. Have a fantastic rest of your week and a great weekend.